Imagine a country with some of the largest natural gas reserves on Earth, a country sitting between Europe and Asia, a country with enormous resource wealth. On paper, it sounds like exactly the type of place frontier investors would be looking for. But there is one major problem. Most investors cannot actually invest there. This is Turkmenistan, a country with incredible economic potential, but one of the least accessible markets in the world. When investors look at emerging and frontier markets, they often focus on things like population growth, natural resources, strategic location, government policies, and GDP growth. And those things matter. But they are only part of the story, because a country can have enormous potential and still not be investable. And Turkmenistan may be one of the clearest examples. Turkmenistan became independent in 1991 after the collapse of the Soviet Union. Like other Central Asian countries, it inherited a Soviet-style economic structure. But while countries like Kazakhstan and Uzbekistan gradually introduced more market reforms, Turkmenistan followed a different path. The government maintained a much larger role in the economy. Many major industries remained controlled by the state, and the country remained relatively isolated from international financial markets. However, under the current government, led by Serdar Berdimuhamedow, there have been signs that Turkmenistan may be slowly testing a more outward-facing economic model. The country has taken steps to encourage private sector development, modernize parts of its financial infrastructure, engage more with international institutions, and explore reforms aimed at attracting investment. But unlike some of its Central Asian neighbors, these changes have been gradual, with the state continuing to play the dominant role in the economy. So why does Turkmenistan attract attention? One word: energy. Turkmenistan has some of the largest proven natural gas reserves in the world. The country holds roughly 13 to 14 trillion cubic meters of proven natural gas reserves, placing it among the top countries globally. Its crown jewel is the Galkanish gas field, one of the largest natural gas fields ever discovered. Natural gas dominates Turkmenistan's economy. The country produces roughly 80+ billion cubic meters of natural gas per year and exports a significant portion. And its biggest customer? China. This is where the story gets interesting. Turkmenistan's economy is heavily tied to China through the Central Asia-China gas pipeline. China gets a reliable source of energy. Turkmenistan gets export revenue. On paper, this relationship makes sense, but it also creates concentration risk. When one commodity, going mainly to one customer, drives a large part of your economy, your options become limited. But Turkmenistan is not only natural gas. The country also has oil reserves, sulfur, iodine, bromine, salt deposits, and construction materials. It also has a large agricultural sector. Cotton is historically one of the country's major agricultural exports. According to the International Cotton Advisory Committee, Turkmenistan's average output of cotton is approximately 300,000 metric tons per year. Of that, Turkmenistan exports approximately 84% of that to Turkey. So the country does have resources. The issue is not whether Turkmenistan has assets. It clearly does. The question is whether those assets become accessible investment opportunities. And this is where Turkmenistan is very different from other frontier markets. Kazakhstan has the Kazakhstan Stock Exchange. Uzbekistan has the Tashkent Stock Exchange. Mongolia has the Mongolian Stock Exchange. Even very small markets sometimes provide a pathway for outside investors. Turkmenistan does technically have a securities market infrastructure, but it does not operate like a normal public stock market accessible to global investors. Only in 2023 were the first corporate bonds introduced to the Ashgabat Stock Exchange. There is no practical equivalent of opening a brokerage account, buying major Turkmen companies, and participating in economic growth. And internationally, access is also extremely limited. Unlike some emerging and frontier markets, there are no widely traded Turkmen ADR or GDR listings on major exchanges. You cannot simply log into a U.S. brokerage account and buy Turkmen energy companies, Turkmen banks, or Turkmen infrastructure firms. For ordinary retail investors, there is basically no easy public equity route. So what about investment funds? This is also challenging. Many emerging market and frontier market funds completely exclude Turkmenistan. Why? Because funds need tradable securities, market liquidity, reliable custody, transparency, and regulatory access. Without those things, even professional investors struggle. A fund manager may believe Turkmenistan has potential, but believing in a country and being able to invest are two very different things. So who actually can invest in Turkmenistan? Mostly large companies, strategic investors, or foreign corporations, especially companies involved in energy, construction, infrastructure, or industrial projects. Investment usually happens through direct investment, joint ventures, government agreements, or large contracts, not buying stocks. And then there is the currency. The Turkmen manat is another major challenge. Officially, the currency has been relatively stable for years, but there have historically been major differences between the official exchange rate and unofficial market rates. That creates a huge issue, because for investors, the question is not just, what is my investment worth on paper? The question is, can I actually convert that value back into dollars? Currency convertibility matters. Access matters. Liquidity matters. This is why Turkmenistan is such an interesting case study. It shows that resources alone do not create an investment opportunity. A country can have huge natural gas reserves, strategic location, and economic potential, but without accessible markets, transparent companies, currency convertibility, or investor protections, that potential can remain locked away. For Turkmenistan to become more investable, several things would likely need to happen. First, more private sector development. Second, more transparent financial markets. Third, more accessible investment rules. Fourth, potential privatization or listing of state companies. And fifth, a more flexible and transparent currency system. Those are the types of changes that helped other frontier markets attract more attention. In Turkmenistan's case, there is an objective to develop the private sector. The Union of Industrialists and Entrepreneurs of Turkmenistan supports local entrepreneurs in food processing, agriculture, construction, textiles, and consumer goods. However, while what we know of the private sector, meaning free enterprise, many successful businesses remain closely linked with the state and their priorities. The bull case for Turkmenistan is simple. If the country ever opened more significantly, there is a lot for investors to look at. A small population of approximately 7.7 million, huge energy resources, strategic geography, potential infrastructure development, and a location connecting Central Asia, Europe, and the Middle East. The underlying assets are there, but the risks are also significant. 1. Limited investor access. 2. Heavy government involvement. 3. Lack of public markets. 4. Currency restrictions. 5. Limited transparency. 6. Dependence on natural gas. And 7. Dependence on China as a major buyer. This is frontier market risk at an extreme level. Turkmenistan may be one of the most fascinating frontier market examples in the world, not because investors are rushing into it, but because they can. It shows the difference between a country with potential and a country with accessible investment opportunities. Natural resources create wealth, but markets, institutions, and access determine whether investors can participate. If you're interested in deeper analysis on frontier and emerging markets, markets most investors overlook, consider subscribing. This is Frontier Market Intelligence.